how would your company, which has already kind of led the way in helping retail investors get pieces of these kind of assets, how is a company like Atomic going to help them put them in their 401ks?
So to take a step back, it's important, first of all, to understand what Atomic does. So we're not a direct-to-consumer application. Instead, we partner with companies and institutions that are looking to offer different investing products to their clients. So we partner with companies like NerdWallet, companies like Bluevine, companies like Yield Street that provide access to private market investments to their clients. And so the way that Atomic could work in this particular space is actually to work with retirement plan providers and record keepers to be the custodian for these underlying private market investments in their plans.
So the balance that I guess regulators are trying to strike here is allowing people in their retirement accounts to have access to these what are fairly risky and sometimes illiquid products and keeping them safe, right, from blow-ups. How do you think this is going to work? Like, obviously, some alternative investments, the illiquidity isn't a problem since they're retirement accounts. On the other hand, when you say Yield Street, I think about crypto. So how's that going to work?
So you're right. Illiquidity is one of the gating factors for broader acceptance of private market investments. But if you think about it in the context of a retirement plan, typically these are longer dated investment plans. And so when we speak to practitioners in this space, many of them are looking at putting it into target date funds and having it be a small slice, maybe 5 to 10% of the overall allocation. As for crypto, I do believe that there are advancements happening in the tokenization space to actually provide even more liquidity on top of these private market investments.
I'm curious what demand looks like. We were speaking to Deb Boyden of Schroders yesterday on the close. They recently put out a study that found that 45% of the investors that they surveyed would actually like to add private assets into their retirement plans. And I wonder if you have any sense of what that demand looks like, because we know that the issuers who actually are trying to offer this up certainly want to make this happen, but does the end investor thinking about their retirement plan truly want this as well?
So I think the proxy that we use to gauge demand for private market investments in retirement plans is what we're actually seeing in taxable accounts. So as mentioned, we are already providing access to private market investments in taxable accounts. And we're seeing it as a product that's actually gaining quite a lot of steam, especially private credit funds. Most of our investors, at least with some of our partners, are investing huge sums to get additional yield in those products.
Well, you mentioned private credit, and that's something else I was curious about. We say private assets, but that's a pretty broad umbrella. You think that, the average person has heard about private equity, might have some idea of what that means. Private credit hasn't been socialized to the same degree, it feels like.
It hasn't been. It's only been in the last, maybe since 2010, that it's become a lot more commonplace for people to invest in private credit. But I'd say for the mass retail investor, it hasn't been truly accessible, mainly because of accreditation requirements. And at the same time, there aren't that many platforms that are giving access to these securities in a way that is accessible. So in a fractional way, for example.
That's why I think Yield Street is so interesting, because you can do private credit, litigation finance, art collectibles, and then the fractional ownership is something that you were doing even before that partnership at Atomic. I remember before you even had your partnership with NerdWallet, your business has grown significantly since then. And to that point, you've got some new financing. Tell us about the latest round.
Yeah, so we just closed a $30 million raise from different venture capital firms, as well as institutions like Nationwide, Erie Insurance, Intuit, as well as Aquiline and Brewer Lane. The company has grown significantly over the last year. We've more than 52-fold the number of investing accounts that we serve. We've tripled revenue. We now trade about $20 billion on an annualized basis. And so this round is very exciting to allow us to broaden our mandates in serving traditional financial institutions, as well as companies in different regions of the world.